Okay, everyone, there's a lot to talk about, so let's get straight into the price action. But before we do any of that, just a big shout out to everyone who's joined the family lately. Shout out to Darshan, shout out Darshan. By the way, I am horrible with these names. I'm terrible at reading names, so please don't judge me. Shout out to Dogahankar. If I'm butchering your name, right, just hold it, hold it. Um, Shout out to Amargam. Shout out to Devo Drahanman. Shout out to Eric Tibble and Nikki269. I think I've given Nikki a shout out before, so double shout out to Nikki. Shout out to everyone and welcome. I hope you're finding these signals useful. Obviously, if you need any assistance one to one, feel free to hit me up on the website. Use this button here because this comes straight to my phone. All right, so you can simply message me here. All right, but shout out to all you guys, and hope you enjoyed today's signal. All right, so where are we? Where were we? And how did that last trade do? How did that last trade do? Is the question. I believe as of last trade, we were right around here. Good. So that was about 7 o'clock on the 3rd of October. So we said to ourselves, all right, we appreciate that based off this bear trend, we've started to consolidate in our range. We've had tap number one, tap number two, looks like tap number three. All right. And we said, right, we're gonna wait. We're gonna wait. We're gonna be patient. We have a potential range deviation set up, and I am waiting for a market structure flip before involvement. I said if we reclaim 60,886 with a retest, emphasis on with a retest, I will trade that. All right. Okay. But remember, we've got some demand below us, so be careful. Let's see what happened. So this was a setup. Let's see how this transpired. And let's see if this was a winning trade or losing trade. And if it was a winning trade, how much could we have potentially got off of that? So I'm going to click the play button and we're going to have a look at this one. Boom, 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 boom. So beautiful trade. Very, very nice trade. Very nice trade. All right. We got that reclaim. As we can see there, this was the line in the sand. All right. We pierced through that level. Not only did we pierce through that level, we had a nice retracement almost directly to that entry zone. Almost directly to that entry zone. And then we went up. All right. And we're still in the uptrend. So congrats if you took that trade. You should be in profit now, 100,000%. You should have already de-risked that trade, 100,000%. All right. And you should be playing with house money, 100,000%. So congrats if you took that one. If you took that one, don't forget to leave your trade in the Discord on the profit wall. Let's see how well you're doing. All right. Okie doke. So let's see. How was that trade set up? Let's talk about why that was even a viable trade. For those of you who are here for the first time, we're going to go through that trade and see, okay, what were we seeing in the market and what made us decide that's where our next trade is going to come from? So first things first, we realized this is a nice little Wyckoff accumulation with tap number one, tap number two, tap number three, which each successive tap trading lower than the previous one. We can see that the people who long here, they were swept by these guys. Then they were swept again by this, bear trend here. Okay. We can also recognize that we have this nice bearish trend line of liquidity. All right. We have those who shorted from this 2 minute supply zone that we talked about. And we also got those who shorted here. And, we had this nice little beautiful trend line that we can see here. All right. And usually trend lines are indicative of where the market is about to start going. What do I mean by that? Well, if we go to the whiteboard and I show you different ideas in terms of trend lines, let's say we've got a bull trend line that looks like this. All right. Usually, if you have your trend creating higher highs and higher lows, forming this nice little trend line, what we call this is basically a pool of liquidity that can easily get run. So the moment you see a flip in market structure off of a trend line like this, let's say we see a flip, so this goes up and then this, let's say the flip happens here. This is a nice area to get into a trade there. Why? Because usually these trend lines, all this liquidity, the people who longed over here, people who longed over here, people who longed over here, guess where they've left their stop losses? They've left their stop losses here. They've left their stop losses here. They've left their stop losses here, and they've left their stop losses here. So this usually comes back down to sweep those stop losses. All right, sweep those, buy orders, and that creates the fuel to come all the way down. All right. So usually this is something to look out for. It happens all the time. If you've tested and back tested Bitcoin, you realize this happens all the time. It not only happens as a curved trend line, it can also happen as a straight trend line. So whenever you see something like this, where you've got price respecting nice little trend line, higher highs and high lows, all right, and then we get the break, retrace, boom, it's very, very, very likely price is going to come all the way back down to this level. Okay, so it's just going to rotate all the way back down there. So this is something we go over in our one-to-one sessions. This is one of the topics, we spend a lot of time on, maybe about 20 hours, talking about liquidity, talking about trend lines, talking about all the different, alterations and permutations of price action when it comes to trend line. All right, so if you do want some more information on that, if you want, some guidance on that, feel free to hit me up on WhatsApp. You've got all my details on the website. All right, so that's exactly what we saw there. Yeah, so where is that trend line then? Where is that trend line we'll see? Well, that trend line we saw looks like this. Well, price did 1, 2, 3, 4, and then it broke structure, retraced, and it's on its way back up. All right. Now, where else can we see this, phenomena? Where can we see it? Can we see it anywhere else in price action? TJ, you're just telling me about this concept. You're not giving me proof. Where is the proof? All right. So what we're gonna do? We're gonna go on a 1 hour, see if we can find some proof. Let's see where else it's happened. Let's see if we can see some trend lines that get swept. Let's see. Look, see, we've got a nice one over here. So if you look at this as a trend line coming from here all the way up here, all right, where you've got, your increasing buy orders going up. So you can see that once we get a flipping market structure up there, that all of a sudden it gets run. In fact, you can also see this as a bigger trend line where you've got this like looks like that, So we have up, down, up, down, up. Okay. And then we flip structure here momentarily. So we flip structure here, retrace, and guess what happens? We sweep all the way down. Where else can we see? This happens all the time, especially when you have a range. Wherever you have a range, there's a high chance you're going to get a nice little trend line sweep. Okay, let's see what happened here. All right. Well, perhaps if you treat this as a big range, okay, it's a wonky range, but if you treat this as a big range, we can kind of see the same thing happening here again. All right, perhaps if we ignore this wick, because this wick kind of ruined everything, but if we treat this as a range like that, can you guys see that? We can see a nice little trend line up. So we've got up, we've got down, up, down, up, down. We'll flip market structure here. Boom, we come all the way back there. All right. So this happens all the time, all the time. But I digress. I'll go back to what we need to be talking about today. And yeah, that's just a little quick lesson for you guys, so you can watch out for and back test that. Why not set yourself homework to back test? Back test all the time. This has happened on a 4 hour in the last month or in the last 2 months, all right, and see, did you have a trade entry? If so, there you go, you have a strategy moving forward. All right, so now, congrats if you took that trade. All right, we're not done talking about that trade though. Congrats if you took that trade. We're waiting for a reclaim here at 60,886. Let's go through it on a 10-minute. Let's see if, where was it, a 10-minute I said to look at? Let's quickly take a look at that. All right, I didn't give a time frame. Did not give a time frame. But 10-minute is a safe bet here. So if we see, we've got our trend line of liquidity heading downwards. All right, and actually, what happens is we get a tiny bit of accumulation going on here before we flip. Okay, usually we just come up, down, up, down, up, down, boom, flip. But we get a tiny bit of accumulation here before we flip. Now we can look to analyze this. We can look to decipher what's going on here, but really and truly, it stays the same. What a lot of retail or YouTube traders will call this would be some sort of wedge pattern, right? Where you've got this line here, you've got this falling wedge, and then boom. But it's based on the same concept, isn't it? It's based on liquidity. So it depends on how you want to look at it. It's almost the same thing. All right. So let's see how this trade happened. So if we use the bar replay tool, we're waiting around. At this point, we've got the break. Okay. We can see that we clearly reclaimed that level. We can see that we're closing and trading above that level. So what are we waiting for now? We're waiting for a retracement. Now, some people don't wait for a retracement. Some people say, do you know what? Forget it. I don't need to see a retracement. Market structure is flipped. I'm in. That's fine. That's fine. It's just if you have that approach, you have to remember that you are leaving some money on the table, more often than not when it comes to risk to reward. All right, but that's fine. That's fine. All right. So I wait for a retracement. I wait for price to come all the way down. Now, what you could have done here is you could have said, all right, maybe I'm waiting for a fib retracement. So take a fib tool, take it from the low all the way to the high. All right, extend it across. And you want to see, okay, where is my golden pocket? Where is my golden ratio? Where's my golden pocket? So here, the golden pocket was really low. All right. So if you use the fib tool here, you may not have been able to enter this trade because I think the golden pocket was a bit too low. But if you use perhaps, let's say you use the 50% mark, or let's say you used, the 38% fib retracement, yes, you might have been able to catch that over there. So the fib, okay, fib, I probably wouldn't have used fib when it comes to that. But as far as this entry goes now, let's see. How could we have entered this trade? And did we have even a second confirmation off of this? So I'm quickly going to see what the market structure is on the way down, on the way up. Here we go up, down, up, down, up. We're going to make this a solid line. And we're going to give this nice, thick, solid line. And we're going to make this, let's make it red. Why not? All right, so this is what the structure looks like on the way up. We start the retracement. As we start the retracement, we get that. So as we start the retracement, this is what our retracement leg looks like. It looks like it looks like this on the way down. But on a more internal scale, we have this coming on. So lower high, low low, lower high, low low, lower high, low low, and then we get another flip. Okay, so there is another break of structure. So this is what we call a reconfirmation. So if you wanted to enter based on the reconfirmation, your entry wouldn't have been as juicy. It would have been up there, okay, which is still fine. Your entry would have been up there, and we can see how we could have taken that all the way down. Now, your stop loss, I think the safest thing to do is to put your stop loss down here. That was the safest play, in my opinion. Now, you could have refined that, definitely. You could have put your stop loss up here after you've entered based off of this flip, okay, with the intention to say price should not come below that level again. That is doable. But anyways, let's see how this trade transpired so we can do a risk assessment on it. Okay, so price simply rallied up. It rallied up, creating high highs and high lows. All right, had that massive drop down, and here we are at the moment. Okay, so this is our current price action right now. Let's see how much we would have earned off of that trade. Now, let's say we entered. Let's say we entered off of the close. If we entered off of the close, the initial close. All right, so that trade, the risk to reward, it's not fantastic. 1.14. They're not crazy, and this is why I say this is why it's good to wait for that retracement. Because as soon as we start to wait for that retracement, guess what? Let's say we get that trade over here when it flips, when we get that reconfirmation, that increases to 1.81. Again, so this isn't the most lucrative trade. It's not the most profitable trade. All right, we have reclaimed most of that liquidity in the sense of that we've taken out these shorters. We haven't quite taken out the people who shorted here at this 2 minute zone. All right, but we're on the way. We're on the way. All right, so that's it for that trade. Now, okay, so now the question you're asking is, what does the future look like? Where's the next trade? Where is the next trade? So, in order to do that, I'm just going to quickly do some top-down analysis. Start from the monthly, give us some perspective as to what's going on in the market. The market's been rather stagnant in 2024. All right, but we're going to have a look at the global time frame. So obviously with Bitcoin historically, we've had high, 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 low, high, high. We had a nice little counter trend model 2 up there. We flipped market structure again bearishly, which took us down here. Flipped market structure again bullishly. Now we've closed above, not a convincing close, but we've closed above the previous bull cycle all-time high. All right, but we haven't managed to really pierce above it. Right, so that is giving us warning flag that we could potentially be rotating all the way down. However, we could be generating the juice, the fuel, all right, to give us that next little push up. So all of this price action that we've seen could just be to give us something like that, boom, boom. And this is where the real bull market starts, isn't it? This is where we head up and we get to that 100K that everyone's waiting for. All right. But that's what the monthly looks like. If we look at the weekly now, we get a little bit more definite market structure. And we can see here that as far as the weekly goes, we can see that we're just consolidating in this range, aren't we? We're creating this nice little trend line again that we talked about. And we can say that as soon as we get a flipping market structure off of that trend line, yeah, then why not? Why not go in for that long? Could that be the long of the bull market? And also, if we go down to the daily, now the daily is simply just going to give us a more definite perspective on what's gone on here this year. All right. So, or even since March. So we've been ranging since March, and we've got this nice little this trend that's kind of tending downwards, isn't it? It's kind of tending downwards like this. We thought, are we going to come up here to get a reaction off that range high? Get a reaction off this trend line before we head back down. That's plausible. That is still plausible. All right. It's still plausible. And we're also looking at, in the case we're rallying all the way down, where could we get a bounce? Where could we get that bounce? Is that bounce going to happen from exactly where we are now? Is it going to come back down to that daily? Happen there? Is the fib going to do it for us? Okay. Is this range low going to do it for us? Or is it going to come back and try and SFP that daily level before it does it? All right. So that's what we're looking for globally. All right. But the moment we start rallying down here, now this is the critical region for Bitcoin. Because if we lose this daily, if price comes and price decides I would like to do this, break below this level, okay? And that means, yes, we could be in for a retracement short. Yeah, great. However, if we lose that level, the next target is this guy. These guys over here. All right. So that's coming all the way down here. And it's coming to about maybe 40K. About 40K. All right. 40K. Not many people want to see Bitcoin at 40K at the moment. All right. But some people do. Some people are waiting for Bitcoin to drop a bit lower before they load up on all the altcoins, before they load up on, some more Bitcoin, etc. All right, so what are we looking out for now? What does the week look like? What does the weekend look like? Where are the next trades coming from? Okay, so we've got about 5 minutes to talk about that. And we're gonna start by realizing, hey, this is a range. If this is a range, what do we expect? We expect deviations off the range highs and off the range lows. Are we heading towards the range high? Yes, we are. All right. So this is our range high coming in at 62,466. So that's kind of where I'm looking for my next trade. So if I get a nice market structure flip here, happy days. I'm going to be in that one. All right. 100,000%. Okay. Now I am also aware that because we're in a range, we could blast off of this range. We could actually break through from this range. And that is not, that's not too far-fetched. Why is that not too far-fetched? Well, it's not too far-fetched because, hey, look, we realize that on a wider scale, we are still ranging globally. We've got the green range that we can see. We've got the blue range that we can see. And this could potentially just be, uh, up, down, up, down, up. That could potentially be what we're doing. Okay. So we kind of realize that, price action, it's allowed to do anything it wants. No one has a magic wall that can tell you, hey, listen, this is what price will do next. But what we can do is we can stack the probabilities in our favor and say, okay, which plays have the highest predicted probabilities and which plays can we bank on? So looking at this as a range, I'm not going to have a bias here. I'm not going to say, right, this range has to break. It has to break bullishly. No, that's not the way to do it. We can say, right, this range could break bullishly, but it could also break bearishly. And in the case that it breaks bullishly, this is what I'm going to do. And in the case that it breaks bearishly, this is what I'm going to do. So trade number one is that deviation trade from the range high. Now I realize we've got 8 hour supply all the way up there. So there is a chance that, we don't get that deviation. And instead, there's a chance that instead we break through that level. But if we break through that level, there is a chance that we start to range up here. We dip into that 8 hour zone and then we flip market structure bearishly. Okay, so there is a chance that that happens. And because there's a chance that that happens, trade number two would be to watch that zone. Okay, short trade number two would be to watch that 8 hour zone. So because of that, we've already got an alert there waiting for that trade. And that's similar to the trade that we already had earlier in the week. Okay, now we're also aware that we've got some liquidity over here. See this curve, nice little bit of liquidity. There's no reason why we can't sweep that, all right? And I would be careful at this 8 hour zone. The reason I would be careful is we have got inefficiency up here as well. We've got some fair value gaps up here. So which means, yes, we could also blast through this 8 hour zone. That is a plausible option, all right? So anyways, that is trade number two. So I'm just going to, I don't really like putting many of these setups on here. And if I do, I put them quite small, but these are just ideas, right? These are just thoughts. I'm not saying go and go to your chart and find 63,011, put a short limit order, and why? Because TJ said to do it. No, that's not what you should do. But just keep an eye out on those levels. Set your alerts, and if you get your confirmation at that level, take it. That confirmation could be anything. Could be market structure flip. Could be the divergence in RSI. Could be divergence in market cipher. Could be an EMA crossover. Could be a magic cross. Whatever. So wherever your confirmations are, stick to it, back test it, and use it. All right, so that's my next trade. Now, do we have any longs coming up in here? Well, as far as longs go, I'm kind of seeing that we are getting this nice little trend line develop here from the bottom to the top. Okay, so we've had one tap, two tap. We could come and bounce off of it again. And, this is building the case that this short deviation may potentially be a viable play. But in the case that, yes, we do not, you know, actually, in a case we don't quite take the high, and before we take the high, we start to maybe rally down, and rally down towards the range low. I'm going to be waiting to see, do I get a flip in market structure on at the range low? Do I get a retracement? I'm still going to take that up. Okay, so that's what I'm going to look out for. That's my next long trade. That's going to be perhaps trade number three. Okay, that's going to be a deviation from the range low. And that could come deeper, actually. So we need to move this range low a bit further down. All right, so it encompasses the current price action. And don't forget, we've got demand underneath. See, we've got this guy here. That's a 10-minute demand. We've still got him over there. We can get rid of this guy because we've tagged him. All right, so we can also get rid of this 12-hour guy because we've tagged that as well. Okay, but we haven't got this 10-minute. We don't have this 3-minute, and we definitely don't have this daily below us. So we could still come back down to tag those before we head up. So that's trade number three. That is definitely trade number three. All right, so trade number three is clear cut. Now, trade number four, what else can we look out for as far as trade number four goes? Well, trade number four, well, that's in the case that, in a bullish scenario, let's say we break up and we get no resistance from this 8 hour zone. Instead, we break through this 8 hour zone. Okay. Now, if we break through this 8 hour zone, that means at some time frame, we have flipped market structure again, bullishly, because we would have taken out this level. So we can take a look at that quickly. That means that, let's say, perhaps on a 4 hour. Okay, no, that won't be clear on a 4 hour. Okay, this isn't definite market structure on an 8 hour. Okay, so you can't really make that argument. Perhaps on a 4 hour, well, no, you can't really make that argument. We can't really make that argument. But I do think if we reclaim this 8 hour zone, I would treat this 8 hour zone as some sort of resistance, which means that if we break across this 8 hour zone, I may well look for a retest off of that zone, treating that as some sort of resistance, and to take it up to this green line. All right, to take it up to this green line. But that's in the future. When the time comes, we're going to discuss that a bit further. All right. So what if we break bearishly from this range? All right. That's the next scenario. What if we actually break bearishly from this range and we don't rotate at this range low and we dip into this zone? Well, if we do that, I'm going to be looking at this massive daily zone to see if we get a flip. If we get a flip in here, I'm long in it. If we get a flip in this green box as well, which is the Fibonacci zone, I'm long in it. Now, for some of you who are new to this channel, you're asking, what do you mean Fibonacci zone? Where did that Fibonacci zone come from? Well, that zone came from here, taking this pull from this low. Oops, not that. Bear with me 1 second. I'm getting a call. 1 second. Okay, sorry about that. So we're thinking, how did we get this green box? Well, this green box is simply a fib pull from this low to this high. Okay. Okay, no, it's not from that low to this high. Perhaps it's from this low to this high. Yep, that looks more viable. Yeah, so from this low to this high, we need to adjust it actually. That's what that fib pull is. Okay, so that's the Fibonacci zone we're watching out for. So I'm going to look to see if we get a bounce off of that region. All right, and that's kind of it. That's kind of the levels I'm waiting for. There's nothing fancy, nothing new. Bitcoin, it does the same thing over and over again. So all you have to do is prepare, plan your trade, and trade your plan. All right. All right. Now the real question is, how do you enter these trades? Yes, TJ, I've got the zone set out. Yes, I'm waiting ready for it. But how do I enter these trades? Well, you enter these trades based off of market structure. That's how I do it. I don't know how you do it. That's how I do it. Let's say we have a zone here. Let's say this is a 10-minute, or 20-minute demand zone. I'm going to wait to see what's price doing as I come into my zone. Is it creating lower lows and lower highs? Am I getting clear market structure? Yes. As soon as I dip into my zone, do I get a flip in market structure? Yes. Do I get a retracement? Yes. Am I in that trade? Yes. All right, so that would be a long trade, and that trade would take place right around here. Where would I put my stop loss? My stop loss would cover that low, okay? And I'm going to look to play that trade on the way up. How can I de-risk my trade? Well, I can de-risk my trade by now following this leg. So if this leg gives us internal market structure going up and down, all right, let's make that black. I can follow that trend, and as soon as we have a few breaks in market structure, let's say we're at this high or this high, I'm simply gonna move my stop loss to entry and say, yep, that's a free trade. So if price decides to reverse on me, that's completely fine. That's how we enter these trades. And what you find is that as you're entering these trades, let's say based on market cipher, RSI, you're gonna find you have a nice bullish divergence where your price is coming down and then your RSI is trending up, or your momentum wave is trending up. All right. And we can clearly see that quickly. If I add the market cipher, I don't think I've got time to do that, but you can see that based on your indicator and what you're using. All right. So we'll leave it there. Hope you have a great time. I hope you have a great weekend. Spend some time with family, and I will see you on Monday.